CleanMax IPO. That's going to be opening on 23rd of February. The company owns renewable energy plants, solar and wind, and sells 100% of electricity through long-term contracts directly to corporate customers and has set a price band of 1,000 to 1,053 rupees per share. My colleague Reema caught up with Kuldeep Jain, CMD at CleanMax, and began by asking about the company's profile. Listen in.
CleanMax owns renewable energy power plants, both solar and wind power plants, and we sell the power so produced, 100% of it to corporate customers. This is different from most listed utility companies who sell most of their power to power distribution companies. We go directly to the consumers who are large corporates.
And 78% of your overall revenues comes from directly selling power to these corporate clients. And 22% of it is sort of services EPC kind of business. Is that correct?
That's right.
So who are your top corporate clients?
So we sell energy to the largest companies. So 85% of our energy sales is to clients credit rated AA, AAA or multinationals. Within that, AI infrastructure is a huge segment for us. As of December 25, 43% of our contracted capacity was for data centers and AI companies. And some of our largest clients are the big tech such as Google and Amazon and Meta and Apple and so on. And the other 57% is to large corporates who are seeking to both reduce their power costs and go green. So, twin benefit, reduce your power costs for doing the right thing, which is lowering your carbon footprint. And therefore, this has been a very high growth business.
And your market share in this CNI segment, commercial and industrial, would be?
So CleanMax is India's largest CNI player. We have about a 12% all India market share.
Okay. So now just looking at your financials, Kuldeep, FY23 to FY25, on a CAGR basis, your revenue growth is 26%, but EBITDA growth is 58%. What explains that?
So in our industry, the EBITDA growth is the more relevant number because we have two segments. First is renewable energy power sales. And that's a 93% gross margin business. So, if you have 100 rupees of revenue, you have 93 rupees of gross margin or about 85, 86 rupees of EBITDA margin on 100 rupee of revenue. Then we also, if corporates want to own their own power plants, we would also build it for them, which is the corporate EPC segment of our business. There, the margins are 15, 16%. So, the energy sales has grown faster. And therefore, the EBITDA growth, which is the relevant metric here, which is the profit before interest and taxes, that growth has been 58% for the last 3 years.
Now, renewable energy is a very capital-intensive sector, and you own your own energy assets, solar, wind, hybrid, etc. What is the leverage on the books and the key leverage ratios? Debt to EBITDA?
Sure.
Interesting. Go ahead.
Sure. So, you're absolutely right, Reema. It's capital intensive, and therefore capital productivity is important. Like how much capital did you have to put to work to earn a rupee of EBITDA? So CleanMax gross block to EBITDA, which is how much money we put in for every rupee of EBITDA, is about 5.8 times. But for renewable energy peers, listed peers, that number is about 7.5, indicating that we have about 28% superior capital productivity. Secondly, on leverage, we also conservatively levered at about 4.8 times net debt to EBITDA. The industry median is about 5.6, 5.7, something like that. So we are conservative on leverage compared to peers, and the key ratio is about 4.8 times net debt to EBITDA.
And what is the absolute debt number?
It's about 8,000 crores.
Now let's talk about your expansion plans. You currently operate 2.5 gigawatt of capacity, and you have an additional 2.53 gigawatts of capacity under contract. So when do these incremental capacities come on stream? When does it become operational? And considering that you have so much capacity, can we assume that the past EBITDA growth rate of 58% can continue in the future?
Thanks, Reema. So as of December 25, we have 3,100 megawatt of built capacity, like it's operational, and another 2,900 megawatt contracted. So it's interesting that it took us about 15 years of existence to get to 3,100 megawatt built, but at the same time, we have 2,900 megawatt contracted, which should be by contractual obligations slated to come on stream in the next couple of years. So obviously, on a base of 3,000, if you're adding 3,000, that's very high growth, continued for a few years.
But what's the timeline for commissioning this? Next few years is what? Like 2 years, 3 years,
2
4
years.
years?
Next 2 years.
In the next 2 years?
Yes.
And with aggressive expansion plans, is it fair to say your leverage again goes back up even after bringing it down?
I think the way we look at it is that the net debt to EBITDA ratio indicates the ability to repay. And in our business, we have 23-year-long power purchase agreements. So in renewables, you do have a typical net debt to EBITDA, if you look at industry peers, also of well above 5. We've been below that. That's justified because there's cash flow supporting that. There's typically 17, 18-year debt against a 23-year power purchase agreement. That's the nature of our industry.
Okay. You turned profitable in FY25 after making losses in the prior years?
Yeah, so in our business, everyone looks at it as a cash ROE metric, which is what is the cash returns divided by cash equity invested. And in the last year, we had about 18% cash ROE.
So as solar prices come down, and these are long contracts that you've entered into, PPA, is there not a risk that one of your clients says that, the price that I've contracted with you is too high, I'm getting it in the market on the spot at a much lower price, and therefore they terminate your contract?
So corporates prefer everyday low predictable prices.
Even if there is a sharp drop in the prices?
Even if, you see, because for if you sell goods, so, suppose you're an exporter or you sell goods, you want to have low and predictable costs. If you buy on the merchant markets, someday it may be very low, someday it may be very high, and then now suddenly you have a challenge as a corporate in terms of your cost of goods. Therefore, the way the industry functions, it's on average a 23-year power purchase agreement. And yes, corporates are also growing. So if the price of electricity comes down, they'll sort of buy more for their ever-growing needs and sort of average their costs downwards. But I'm happy to report that we have over 1,500 power purchase agreements, and there's not a single corporate dispute.
All right, that's the commentary coming in from the management of CleanMax. The IPO opens shortly. That's the IPO corner. With that, what we'll do is wrap up on this edition of Halftime Report with the news. The market's holding fairly in the green with the Nifty Bank up 200 points. We'd give it to the team of Business Lunch to take all the market action ahead. Thank you for watching.